How's it going, everyone? It's Sam. We got some good news today that actually caused economists to lower their chances of a Fed rate cut, but yet the market's still moving up on that. I want to talk about that. Also, some big news happening, some big events happening within the next week. If you don't mind, hit subscribe, turn on the bell notification underneath the video so you can see future videos just like this. Also, check out the link underneath the video to Margex where you can start trading crypto. I don't know what you have to see to, get more bullish than this. We're seeing a higher low, a higher high, and we just seem like we're reversing course back up. So if you want to play some long trades, there's the link to Margex underneath the video. You can also short there as well if you think the market's going to go down. Let's start here. The NASDAQ finished the day up 1.22%. Bitcoin also up significantly, 2.5% on the day. And this is mostly due to the fact that we got some interesting jobs data this morning. The U.S. economy added 254,000 jobs in September. This is about 65% higher than last month. Both July and August were revised up as well. Unemployment rate was 4.1%, down from 4.2%. It was also lower than the expectations, and wages are up 4% in the last year versus 2.5% inflation. So this is the lowest point that we've seen, this is the highest amount of new jobs that we've seen since March. So came in higher than expected. Stocks racing up on this news. Tesla's up 3.8%. Amazon ended the day up 2.5%. Bitcoin, as I said, moving up on the day, looking very bullish. Again, with higher highs coming in, with higher lows. We should be watching this level right here, 63.8. It seems like we're approaching it. Obviously, we want to break that, then break the 65, then break the 66.5 mark, hopefully setting in a higher high. Even if we went back down, right? We've seen stuff like this before. If we went back down a little bit more, that's okay, as long as we don't put in a lower macro low or lower low around 52,500. I think we'd still be looking very bullish. Keep in mind, the uncertainty around the port strike is done. They seem to have worked out an agreement. We have the elections coming up. I'm sure that there's going to be some uncertainty around that in the next month, right? Probably a month from now. It seems like, again, the beginning of each month is pretty tough for markets, and then we continue rallying up throughout the rest of the month. But we do have some important economic data coming in next week. But first, look at this repricing. If you look here, we have a 7.7% chance that there is no Fed cut at the next meeting. This is changing drastically. Now, there's only a 92% chance that we see a 25 basis point cut, and there's apparently a 0% chance that we see a 50 basis point cut. Compare that to last week. It was a 50-50 shot whether we got a 50 basis point cut or a 25 basis point cut. So the market is changing very quickly, but yet we're not falling down, right? The stock market, the crypto market's not falling down on this news, which is really interesting. It pretty much is repriced in the rate cuts, but also priced in the good economic data. Now, what does this mean? What am I even saying, right? So before, there was a pretty high chance, 50% chance, that we were going to see 50 basis points cut, and then another 25 basis point at the last meeting of the year. Okay, now we've gotten some good economic data, some good job numbers, which means maybe the Fed does not have to stimulate the economy as much as they thought. Now, there's still good economic data coming in on the inflation side. So the Fed can kind of take their time. They don't have to respond to some crisis of either jobs numbers going down or inflation numbers going up. Now they can just slowly and methodically lower by 25 basis points, which causes less of a shock to the economy. It signals maybe that we're all in a better position, that the economy is in a better position, and there's less uncertainty. So the market's still rallying up, even though we're pricing in less of a chance of 25 basis point cuts. Now, of course, I think this just helps the markets in general, right? When people feel more comfortable, like there's not a massive recession coming, they're more likely to invest in risk-on assets. Now, I would still like to see nice rate cuts because I do think that increases liquidity. I do think that increases the likelihood to invest in higher risk assets. But also, we don't want to be heading into a recession or anything like that. And if the Fed can lower by 25 basis points, a little bit slower, right? 25 basis points, then another 25, then another 25. There's less volatility, and it just makes, again, it makes everyone feel a little bit more comfortable. It means, I think, that we can even run to higher numbers because people are not worried about having so much cash on the sidelines, especially after they get their head around it, especially if the Fed continues to see good numbers from both sides, jobs and inflation, and then presents it in a way that, hey, we're very comfortable where we're at. We're very happy with where we're at. We're going to methodically lower rates until we think that we are at a better baseline. So maybe that takes a year and a half or something like that. But I think that will lead the economy to new highs, right? I think we'll lead stocks to new highs, crypto to new highs, because people feel much more comfortable investing for the long term. DXY moving up today. And that's tied into the jobs reports, the repricing of rate cuts, right? DXY goes up, dollar looks a little bit stronger because we're not going to have to cut rates by quite as much, which typically isn't good for risk on assets, but I think everyone's just very excited about that jobs report and about the unemployment report. Now, next week is a big week. We have a lot of big data. Thursday, we have core CPI. Then Friday, we have core PPI and just the normal PPI and CPI. So we're expecting CPI year over year to come in at 2.3% versus the previous month of 2.5%. So we're expecting it to continue to fall. I don't see the expectations for PPI. Actually, here, producer price index expected to come in at 0.1% compared to the previous of 0.2%. So PPI year over year is right around 1.7%. It's pretty low right now. So big economic data. This week we got a lot of jobs information. Next week, inflation information. That is the dual mandate for the Fed. So I think if we get some good numbers here, people are going to be very excited. Now, we don't want this to come in too low where people are worried that we're going into a deflationary environment. We want it to come in pretty much at expectations, maybe slightly lower, and I think people will be very excited. Even just hitting numbers is awesome. We also will get some Fed governors and presidents speaking as well. Then the week after that, we have initial jobless claims, we have home builder confidence, we have housing starts, a couple other things too. Markets will be closed on that following Monday. Keep in mind too that we're starting to see different companies announce earnings that week. I believe Tesla is this week on Wednesday, not this week, but the week that I have pulled up right now. October 16, I believe, is when Tesla announces their earnings. So we're going to get more and more indication on how the economy looks and how consumers are acting in the week to come, or in the weeks to come. Will Clemente said, Fed easing into a strong economy with stocks at record highs, plus low CPI, plus people are psyopsing themselves out of being allocated to the best debasement hedge that's now investable to all boomers and has cleared its biggest supply overhangs. Lots of worry, but Bitcoin keeps grinding up. A lot of good reminders there. Also, Bitcoin is the sixth largest monetary asset in the world. So it's behind gold being the number one, United States, Eurozone, China, Japan, and then Bitcoin. Pretty cool. 15 years old and is the number 6 spot. Let me know your thoughts on all this underneath the video. Again, if you're bullish and you want to place along on Bitcoin, there's the link to Margex. If you don't like Margex for some reason, there's some other links, Blowfin, WEEX, BYDeFi, CoinW, all those underneath the video as well, in case you want to get a hold of some other exchanges as well. Of course, you should make sure that you have multiple exchange accounts set up because sometimes exchanges go down to volatility. Now, that doesn't happen too much with leverage exchanges, but it happens with Coinbase all the time, so just be ready for anything. Thank you so much. I really do appreciate it. Check out the links underneath the video. Let me know what you think about all this good economic data down below in the comment section, and I'll see y'all in the next one.